I'm Audrey Rickards, and I'm Project Coordinator of the Jamaica Venture Capital Program. A very warm welcome to our audiences all on social media this morning. This is the fourth in our 7-webinar series, and it has been brought to you by the Development Bank in association with the Caribbean Alternative Investment Association. At this time, I'd also like to acknowledge Inter-American Development Bank through their IDB lab, which has supported our programs over the years. Now, this is brought to you by the Development Bank in association with the Caribbean Alternative Investment Association. At this time, I'd also like to acknowledge Inter-American Development Bank through their IDB lab, which has supported our programs over the years. Now, this series of webinars, we thought it was important because we all recognize that COVID-19 has had an unprecedented impact, not just on our lives, but our livelihoods. As we seek to recover from COVID-19 and as our businesses seek to survive, recover, and grow, we thought it was important to really highlight the sources of funding, as we recognize that the traditional sources of funding need also to be supplemented or complemented by the alternative investment industry. And so we have been having this series of fundings, of webinars. So this morning, we're certainly very happy to have a number of industry experts, who are both local and international, who are going to be looking at venture capital. And I'm very happy this morning to introduce our moderator, who is Lisandra Rickards. Lisandra is a former CEO of Branson Center here in Jamaica, and she's now an entrepreneur and CEO of her own company, Soul Careers. So over to you, Lisandra.
Thank you, Audrey, for that great introduction. I've actually gotten some seed investment from a few venture capitalists myself, so I'm really motivated to interview our panelists today. And our panelists are Paul Ahlstrom, co-founder and managing director of Alta Ventures, who's joining us via Zoom. Hey, Paul. Dmitri Dawkins, managing director of Graft Ventures, who's here in the studio with me. Larren Peart, CEO of Bluedot, beside Dmitri. Douglas Lindo, co-owner and managing director of Bellindo Limited. Hey, Doug. And Hernán Fernández, founder and co-managing partner of Angel Ventures from Mexico, right, Hernán? Thumbs up. All right, so you can read our panelists' bios at venturecapitaljamaica.com, and that gives us a chance to just jump right into the issues. Before I do that, I'm going to tell you a little bit about how I'm going to moderate this session. So first, I'm going to do a little mini interview of each of our panelists so we can dive deep into some of the issues. And then I'm going to invite all of our audience to submit questions so we can ask questions via our Q&A session. So make sure you're engaging with us via chat, tap, sending your questions, and I'll make sure to ask them from our panelists. So let's get into it. So venture capital is capital that is put at risk by investors who are investing in early stage businesses. So the key here is risk. The earlier the stage of investment, the riskier it is to invest in an entrepreneur. And in order for that risk to make sense, investors need a much higher return on venture capital investments than other asset classes. But in the post-pandemic world, business has been incredibly disrupted. How has business changed today after COVID-19? So we are going to explore on this panel venture capital in the age of COVID-19. And I want to start with Paul. Paul, you said something really interesting on the pre-webinar meeting, that you've stopped investing and you've started building businesses yourself. Now, you're a renowned venture capital investor. What did you mean by this? You're on mute, Paul.
I've got my mute off. Can you hear me? Yeah, Hernán can hear me. Give me thumbs up, Hernán. All right.
Well, Hernán is hearing him. It's just us in the studio. We're not hearing you, Paul. So give us 1 second.
1 second. All righty. Testing 1, 2, 3.
Maybe we need to turn on the volume of the TV. Okay, Paul, so we are just double checking or sound issues here because I have to hear what you're saying in order to ask you some questions. So we're just making sure that we get the sound right here. But Hernán, thumbs up. Are you hearing Paul? Okay, so Hernán is hearing Paul, but we are not hearing Paul. In the meantime, let me just talk a little bit about what you guys would have seen on the DBJ's social media, this issue of patient capital. Is venture capital patient capital? So patient capital is capital that will grow with you as your business grows. It will wait a little bit longer than more later stages of capital. Venture capital, it depends on how early you get the investment in your business, if that capital is truly patient, right? So the very earliest investors in your business, your friends and family, people that you know, they will be the most patient type of capital. The more formal you get in your equity investment process and the later stage an investor invests in you, the less patient they become. Is that right, Dmitri? Would you agree with that?
Definitely.
And so they'll want to start seeing a return much sooner than the very earliest stage investors. So my investors who came in at the seed, or in the US it would even be pre-seed round, I'm hoping that they'll be as patient as possible as we get our company off the ground and start generating returns, revenues, and profits in the business. So while we test our sound issues with Paul, I'm going to ask you guys just to jump in. What are your thoughts on the patience of venture capital? Starting with Doug.
Sure. Thanks, Lisandra.
Oh, Paul.
Hey, there you are.
We got you.
There's no video of you guys either, so you might want to turn your video on.
Okay.
We're all here. Morning.
So I'm going to ask Doug to just answer that question about patient capital, and then I'm going to go back to my original question for you, Paul.
All right.
I'll just offer one comment in terms of how patient capital is. Certainly the COVID environment has redefined many of our definitions. But I've always applied the approach of how appropriate is my investment to the investor to determine patience. In other words, their level of sophistication, their level of commitment. And that typically will create a leeway in some cases, and then less leeway in other cases. So that's my opening comment.
Okay, thanks, Doug. So Paul, my original question for you. You made a very interesting comment about building businesses versus investing in businesses. What did you mean by that?
Well, to be honest, I'm just an entrepreneur, and for years I've been operating on both sides of the table as an investor and an entrepreneur. And to be honest, I just enjoy being an entrepreneur more. I've raised 8 funds I've raised over $1 billion of capital. We've launched 150 companies, and I find joy in helping entrepreneurs. But if I'm honest with myself, what I've done during COVID is found things that bring me, personal joy. And as we look at the challenges that we're facing and this shift that's happened in the world, the entrepreneur in me looks at the challenges, and I see a glass half full every time I see a problem. And so as I look at the concern about interaction with people that could give me an infection, and all the implications of that, the schools closing, compliance issues at businesses, concerns about interacting and these other businesses that were doing really well. I looked at my portfolio, and I have 2 sides to my portfolio. I have a physical interaction, bricks and mortar side to my portfolio. One of our investments we made was Central Parking of Mexico. And during COVID, all of the parking lots, people stopped going into parking lots for a season and traveling in Mexico City. We also made investments in other physical businesses that have done well, like Little Caesars Pizza, and the pizza business is up 4x. But in terms of the areas that have just done extremely well, that have benefited and had an uplift from COVID, we've seen the digital businesses just flourish. And and so as I've looked at the last 5 companies we invested into and the massive uplift that they've had, there's something extraordinary. We got 5 years of growth in 3 months with some of our businesses. Our projections hit our 5-year projections in 3 months. We have one company called VidAngel that grew 6x sales. We did 10.4 million in sales last year, and this year in that business. And an investment in a company called Mural that was doing okay. And they experienced a over 10x increase in demand for online digital whiteboards. We have a company that had no revenue. They were a social media company growing their social media base for consumers. They pivoted, repositioned, and positioned themselves as a contact tracing application for COVID, and they'll do $40 million in sales this year off of zero last year. And we have another company. It's a truth platform. It's a lie detection platform, but there's no physical contact, so you're not touching anybody. And we just got a contract from the U.S. government because it's been difficult for them to hire on using the old technology, so they switched to digital. And that company, I believe, could be a unicorn. I mean, it did okay. It did 2 million last year, 1 million the year before, and post this contract, they could do 5 to 10x in sales this year. So as I'm looking at these portfolio companies that are creating this massive shift and they're benefiting by this knife edge switch over to digital, we're looking at so many other opportunities that should exist that don't exist right now, and it's hard for me to sit on the sidelines and wait for people to show up with the ideas. And so it's part of my personality. But we called 25% of our current fund, and I called my investors and said of it for right now. We may never call the rest of it. And I know that sounds crazy, but I said we're going to focus on some really interesting and hard problems that need to be solved. And I don't see any entrepreneurs showing up with these ideas right now. And I could wait, but as I've literally seen new markets created overnight and things happen, my softer, kinder, gentler entrepreneur side of me said, as opposed to my VC, shark side, said, let's go solve some problems. And so that's what we've been doing.
Amazing, Paul. I love that. And it really goes to a lot of great capitalists are entrepreneurs themselves. I would say the best venture capitalists are entrepreneurs and can understand the entrepreneurial journey and without the rush to exit. Right, Paul, would you agree with that?
Oh yeah, you're building for the joy of building and satisfying the customer, and you're not thinking about the exit and liquidity. And I know that goes counter to my VC side of my brain, which says focus on the exit from the beginning and build with the end in mind, and drive that. But if you're the guys that build the great companies, you get bought, not sold. Yeah. And the way you get bought is you're zooming past your competitors. You've built something that's great, and you've done that because you have a lot of passion and excitement around it, not because you're trying to generate an exit. I'm sure you can do that. Yeah. Yeah.
Absolutely. So Dmitri, given what Paul has described, why do you think now is the right time to launch a VC fund yourself?
Well, as Paul mentioned, venture capital is entrepreneurship, and I feel very much I'm an entrepreneur as well. Right now, especially in a recession, I think there are great opportunities available. In the last recession in 2008, 2009, we had a ton of good companies coming out, Airbnb being a prime example. But on top of that, right now, people are looking at resilient companies that can maintain their cash flow, that can withstand the threats time over time. And I think here in the Caribbean, that's just been business as usual for us. I mean, the US or European markets don't have those same risks as far as getting a hurricane season every single year, having unknown earthquakes, having foreign exchange devaluation. all these things. And we've developed a lot of great companies and great founders who are weathered and hardened and know how to operate in a crisis. So if now we can provide that patient capital to these founders, support them over, in my case, a 10-year period going forward, I'm really excited to see how.
It didn't look so at first, but we've maintained and been able to survive. So in 2018, to your point, we we took on some venture capital from SSL Ventures, and we exited in March of this year. Ironically and possibly counterintuitively, we exited in the same week, or made the decision to exit the same week of our first case of COVID in Jamaica. And I actually got a call from a well-noted economist in Jamaica asking me, why would you take such a risk at this point in time? Because it has been a risk, and I still question it every now and then. But like I said, we have survived, and we're doing okay as a company now, and we've iterated somewhat. So we've added a lot of digital services to our offerings. So whereas before a lot of the services we offered were offline, we've added several digital services, and we pretty much now are doing everything that we're able to do offline, online, or digitally.
So I want to go back to that decision point to exit, right? In March 2020, we saw what was happening in China. We saw it move across Europe and come to the US and then start in Jamaica. We knew that a recession was likely going to happen if there was a major pandemic. And at that point, you decided to exit your VC investment. So how did you come to that decision at that time?
Good question. Like I said, I'm still daunted by it to this day. And I still question it. But there was I saw a lot of opportunities still. I still see so much opportunity here, and Paul and Dmitri would have mentioned that there's still a lot of opportunity here now in the recession that we could take advantage of. And the decision primarily came from that whole patient capital issue. The capital wasn't necessarily patient. And there are decisions, longer term decisions that I needed to make that I couldn't make in the existing relationship. And we're still in the startup, semi-startup phase, and there are a lot of, there are quite a few, like I said, strategic, longer-term decisions that had to be made, things that I wanted to do that would not necessarily satisfy an investor that was looking for a quicker return. So patient capital is very, very important.
So I know a lot of entrepreneurs would hear that story and ask you, do you regret taking on external capital, and how are you thinking about taking on external capital now?
No, I don't have any regrets. We accepted the capital, or went into the venture capital relationship initially because at the time we needed to also take advantage of opportunities and get capital in to grow the company, and it served its purpose both for Bluedot and for the VC, and it just became time for us to separate on mutually beneficial terms.
Would you take on external capital again?
Definitely. We're currently, I'm currently, after I exited, I thought that the best thing for us to do at the time was to just bootstrap and, not take on, give up any more equity, etc. But seeing all the opportunities that we have now, and, just things that we need to do, hires that we need to make, technology that we need to purchase, our regional expansion that needs to happen, that we're seeing a lot of opportunity in the Caribbean as well. We're definitely, at this point in time, considering taking on external capital.
Excellent. Because my personal philosophy and belief is that you become a true entrepreneur when you have external capital in your business, when you have people that you have to report your results to, and you evolve and become much more sophisticated with that kind of challenge. And a lot of entrepreneurs in the Caribbean shy away from that challenge, but then you shy away from the opportunity to become a better entrepreneur and evolve through those experiences, even if they're challenging. I want to remind you guys, if you have questions, please type in the chat. Type, so that we can ask them when we come up to our Q&A session. Doug, you self-describe as an executive investor. What does that mean?
Right, so I'd say like Paul, and I probably do more entrepreneurial ventures of my own than invest. But I would describe the executive investor as someone who puts up the capital, but also is willing to spend a little bit of executive time bridging the gap for the aspiring entrepreneur. And I think that's really where, to a great extent, I've seen the gap in the Caribbean as a whole and also in Jamaica, is ramping up the lead entrepreneur in terms of the level of sophistication, whether it's on the marketing side and especially the finance side, to get things going. Because I agree with the gentleman here that there are great opportunities, but to convert those opportunities really is a function of hitting the numbers, right?
Yeah.
Putting cash on the bottom line. That's really where the rubber meets the road. So it's helping the inspiration or the perspiration.
Yeah, absolutely. And actually, from my days at the Francis Center, I would say execution was the differentiator between a successful business and an unsuccessful business. And execution depends on the leadership. It depends on the individual behind the business.
Absolutely.
You could have a great business model, and if you don't have a great entrepreneur pushing that business model, then the business model itself isn't going to work. So Doug, you have a portfolio of businesses that you've
Right.
invested in, a portfolio of entrepreneurs that you've helped as an executive investor. What has been the impact of COVID on that portfolio? Similar to Larren or different?
I would say it's probably a little bit different on the bullish side. It's I think, as Paul said, you have some brick and mortar investments and you have some digital investments and you have some things in between. And the investment philosophy that we've always taken is to I think as you pointed out, invest in the entrepreneur first, and understanding that entrepreneur in terms of how committed they are and how teachable they are and what level of trust they bring to the table has been a big factor in the process. So we've seen on some of the brick and mortar side a downturn, but how we looked at it to a great extent is not as brick and mortar for brick and mortar. What we've done is taken what we call a one-step ahead approach, is actually synthesize our thinking of the particular traditional, let's call it the Jurassic industry, and think one or two steps forward on what this could look like in the current environment and what it would look like maybe 2-3 years from now. And it's a big part of, I think, the step forward is going to be intelligent staying power.
So are you actually looking at new investments now, or are you more focused on helping your existing investments to grow?
It's actually a combination of both. As was pointed out by Dmitri earlier, crisis, and Paul talks about it all the time, crisis brings extraordinary opportunity. I think the takeaway I have with COVID as compared to the 2008 financial crisis is that I think I'm a little bit more introspective, a little bit more humble. The things that I thought I knew, I think those things get turned upside down every single day, and I'm actually a lot more comfortable with that than ever before. And I think that's going to help us and the teams I'm involved in make a significant difference going forward.
So last question for you, Doug, is has your evaluation criteria changed now post-COVID in the investments that you're considering?
I wouldn't say they've radically changed. I think they've sharpened. And I've spent a lot more time listening rather than talking. And it is a sharp focus on appropriate digitization. In other words, digital isn't digital for the sake of being digital. It has to be appropriate to the scale of the opportunity and environment. The Caribbean is not a global environment. Jamaica is not a global environment. And in one of our investments, just a little bit back to your earlier point, is that it's one of those investments where it operates on a digital platform for financial services, but it's appropriate to the sophistication of our target market, which are a group of expat individuals.
Okay, all right. So Hernán, I come to you, dialing in from Mexico. You're doing some interesting work right now with Development Bank of Jamaica around setting up venture capital funds in Jamaica. Listening to this panel, hearing from Paul, who was at one point also considering setting up a venture capital fund in Jamaica, hearing from the entrepreneurs and investors here, what really strikes you as you pursue this project with the DBJ?
Oh, thank you guys. Super excited to be here. It's been very interesting because we started this project like maybe late last year, probably starting like early this year. So we were like hit by COVID in the middle of everything, right? So I think like some things might have changed post COVID, but I think that the fundamentals stay strong. What we have found so far is that Jamaica has still a very nascent BC ecosystem, and in terms of entrepreneurs, I think that some of the surveys that we did to investors was that entrepreneurs still have to show a little bit more of traction or more metal for them to investable, right? Sometimes it's as small as having like better pitch preparation or having like a better ecosystem of incubators, accelerators. I think that the overall results have been positive, and we're very excited to work with TBG on this project that will hopefully see an interesting infrastructure for both entrepreneurs and funds alike. One thing that we have constantly seen, and this is something that is claimed by entrepreneurs and goes back to Doug's comment, is the need for experienced capital or active capital, right? And I think that's a true case about angel investment in the US or Europe, where obviously much more developed markets than Mexico, Jamaica, and many others. What you will see is that 80% of angel investors have been successful entrepreneurs. So the amount of information, contacts, the very specific knowledge that an angel investor can bring to a company, it's just massive, right? And the bad news is that that's very hard to replicate, and we will need to wait for certain cycles for that to happen organically, right? I think that the ways to hack into that is try to find the people that are very engaging on this, right? Like talented, successful people, executives that are looking to to not only invest, to coach, but also to coach the new generations. I think the diaspora has a huge role to play in the future of the Jamaica tech ecosystem, because I think that in Latin America and many other emerging markets and the Caribbean, we're lagging so much in terms of like a real innovation ecosystem, right? I think that just the sheer amounts of money being poured to R&D and other things, I think we're lagging in that game. But the good news is that many of our countries have leapfrogged the whole like PC, and now are going much more mobile, and that brings a different opportunity. We're talking about like younger populations that are more tech savvy, and a growing or emerging middle class. So I think the answer is not clear, but there's certainly several factors that I will take into consideration that I'm sure that will play an important role. Again, one is the diaspora, because trained Jamaicans that are everywhere in the world, and many of them, of course, in the US, are getting exposure to a lot of business models, and I can guarantee you that they're thinking, hey, I wonder how this can play out back home, right? If I can do something like this. So, all the infrastructure of Jamaica should be ready to listen to those kind of arguments and potentially bring some of these people back. The other part of or component to that is, the need for, the endeavors of the world, accelerators, incubators. I think we need more and better organized pipeline, that supports entrepreneurs and that starts getting the attention of more investors and VCs, not only in Jamaica but elsewhere. And maybe, sorry, go ahead.
I'm saying absolutely, but finish your thought.
And I would say that the other component that it's kind of like new, so it's important to see how it plays out. But this whole venture builders and company builders, which I think like Paul was mentioning a little bit of his entrepreneurial angle into that, but they're more and more getting traction, and I think that for emerging markets that sometimes have something very unique about their story or their culture, etc., it's worth taking a shot. And in that sense, the other comment that I will say is that I do see Jamaica needing to work closely with other Caribbean markets, right? Because the market is small, and how you hack into many of these markets is actually to footprint, right? You either need a big market or expand your footprint to get like a critical mass. And I'm sure that many of the companies that have operated in many of these Caribbean markets are right now super hardly hit because they had to deal with tourism, right? Airlines, ferries, travel, tourism companies, etc. So we need to think about like what's the next batch for the Caribbean? What can be done for the Caribbean in terms of like new, technology-enabled companies that, yeah, they're not inventing the wheel or they're not rocket science, but they cater to our populations and through this expansion of footprint can bring significant mass as a market.
Absolutely. A lot of great insights there, Hernán. And actually, I've been speaking to a lot of diaspora talent, maybe not older kind of mentor level diaspora, but younger guys and girls who are working at Dropbox, at Twitter, all these companies that have decided you can work from home forever. And now they're really considering leaving the expensive cities, New York, San Francisco, and coming back to Jamaica and working from Jamaica, but working for Twitter, Dropbox, WordPress, Facebook, all those companies. I think it's going to be amazing if we can reverse that kind of brain drain and get that talent back into the Caribbean.
You are absolutely right. That's a golden opportunity right now. We're also seeing that for Mexico. Yeah, of course, there's the good, the bad, and the ugly of living in emerging markets, and you will miss some commodity, good lifestyle things about living in the U.S. But it's a trade-off, right? And people they like their roots, they miss their family, etc. So from the government standpoint, if you can create something that can cater to these Jamaicans and make them really easy, I don't know if it can be like a tax benefit or just some proper like relocation services, etc. But I think you're absolutely right that this can be a really game-changing aspect of COVID that now Twitter and many of these huge corporates are shutting their corporates. So I think that Silicon Valley, as we know it, in terms of everybody living in super expensive housing an hour away from the valley, etc., will change dramatically, right? And if each country can relocate some of their talent, and to be honest, there's some political issues that are also making harder the visa aspect of everything, I think it becomes a very compelling value proposition to relocate some of this talent, and your job as DVJ is, smell them, nurture them, and have them, deliver good stuff to the ecosystem.
I love that. I have been a big proponent of the talent factor. Once we get our best Jamaican talent working in starting and growing businesses, that's when we're really going to see entrepreneurship and as a result, venture capital. That's when it's going to take off in the region and in Jamaica. So before we get to the Q&A, I want to go back to you, Paul. We were working together, Paul, a few years ago to set up a venture capital fund in Jamaica, right? So having heard all of these insights from the people who are on the ground here, from Hernán, do you think that Jamaica or the Caribbean more broadly is still an interesting investment opportunity?
Well, for sure. But as you know, we took it in stages. We did an assessment of this, and this has been an interesting puzzle. How do you take Jamaica from where it is to where it needs to be and where it needs to go? And so I 100% believe that it's possible and doable. And I love the concept of leveraging the diaspora on this. But one of the strengths that Jamaica has is the fact that it's small. And if you look at this, I remember I gave an analogy once of David versus Goliath. And there was this great entrepreneur in Jamaica named David. And I took a picture of him and put it against Goliath. And I said, who has the advantage here between David and Goliath? And everybody will say, of course, it's David. I mean, of course, it's Goliath, right? Because he's big, he's got armor, he's got a sword on. But David had many advantages. First, he was smaller and could move quickly around Goliath, and he was lumbering with this big, heavy sword and armor. David had new technology. He had a sling that he could shoot projectiles like bullets from outside of Goliath's reach. Goliath never had a chance. But when we think of that story, we think of Goliath having the advantage, but he really didn't. He had a disadvantage. And this was profiled in a book called David and Goliath. So I apply that to Jamaica. One of the advantages of the pandemic is that it's forced your country to get on the same page for digitization. You must, you're forced to make that knife edge switch over, because without becoming a digital economy, Jamaica becomes a lot less relevant to the world. You have the horsepower. Some of the brightest people I've ever met have been Jamaicans in Jamaica or living internationally. And so you have the intellectual horsepower. You have many assets that are yet untapped. So I think one of those most important assets is the people. So is it a venture industry going to happen? Well, I think it's imperative that you do it. I think it's imperative that you invest into your people and you unlock the human capital and you build coding schools that will help your population transition to the digital economy. I think that's imperative, and that's venture capital is going to be that gap that fills between where you are and where you need to be, and believes in you. So there are industries that you need to create, need to participate in, and the COVID is now aligning the interests of all the key stakeholders to make it happen. So I think you have a higher probability of pulling it off now than you ever have. My personal choice to go create companies has nothing to do with my belief that my belief in the asset of venture capital. I think venture capital has been very helpful, and we've helped transform and create new industries over the years. It's just really what I love doing. I love creating, and I'm just better at it, to be honest with you.
All right, Paul. So I want to get to the questions from our listeners who are on live. So guys, make sure you're asking those great questions in here. But I just want to make a comment that I'm a big believer that it is talent that drives outcome, right? That is why I found it so career. It is talent that's going to drive
great, successful entrepreneurial ventures. It is talent that's going to drive a venture capital industry. So if we start at the model, we're missing the key component of who is going to execute that model. And so if you're an entrepreneur out there, it is imperative that you upskill yourself and become more sophisticated so that you can attract venture capital in order to scale and grow the industry and your venture. So that brings me to one of the questions from our listeners. How can a company meet the requirements to receive VC funding? So what should entrepreneurs think about when they're looking to attract VC funding? How can they prepare themselves to get it? And I want to ask that to Dmitri, who's setting up a VC fund, as well as Larren, who has received VC funding. Dmitri, you start.
Sure. The very first thing is, I think, traction. To demonstrate that you have some form of product market fit going forward. Even if you haven't actually started generating revenue yet, that you have a certain pipeline of interest for this product. And then the other thing, is definitely having this extreme competitive advantage. Why are you the best person to get this done overall? What makes you the best operator, or is it the business model, or is it the product, or a combination of all of these things? And then of course afterwards it would just be the market that you're targeting. Is the market large enough for scaling? Because from a venture capital perspective, if it is that you can't grow to a certain size, then it doesn't make sense to invest in that business. So I have to be able to see that, okay, by investing my $1 million into your business, you are then going to scale this to $100 million company in 10 years. It doesn't necessarily have to be the next Google or Facebook or any of these companies at all. It can be, I think it should be a lot more sustainable, focus on cash flow, etc. But yeah, it's those three elements for sure.
And I would actually add, from my own experience of raising capital, that the quality of your network matters a lot. If you have a network of people with money and you can make a great case and they know you and they know what you're capable of and they trust you with that money, it is much faster and much more likely that you'll raise capital than if you don't know anybody and you're pretty green in the network and you're just trying to build trust at the time where you're going to ask for money. Then it gets very hard for you to raise capital, no matter how good your product market fit is and your revenue potential is. So Larren, I know you know this from the ground. So tell us, what are your thoughts on this?
For me, I'd say the first thing is that you need to be sure that you want to take you're ready to take on venture capital, not just from a readiness standpoint, but personal, emotionally, mentally. Are you willing now to have someone else in your business making decisions with you, and sometimes for you or along with you, and are you willing to give up that control? All right. So for me, that was the initial, for want of a better word, culture shock, I would say. Having the board in place and then having to get all the corporate governance in place, etc. That was the initial culture shock. But I mean, outside of that, you need your financials. You need to have a clear path and understanding of where you're taking the business, where you want to go, and how you're going to get there. And you have to be able to demonstrate that in a very tangible way to the potential investors.
Right. And actually, I would say don't be afraid of that, because here's the thing. If you understand how to manage relationships, you can manage a board, right? And that's where experience managing a board, managing stakeholders comes into play. If you have a great professional background and you've learned how to handle different personalities, then there's no problem for you to accept external people in your business. But if you've never had to do that before, you're more of an introverted inventor type, and you've never had to manage these personalities towards your outcomes rather than just, well, they gave me the money, I have to accept what they said. No, there's a conversation that has to happen, and it doesn't have to be scary, and you can have a relationship with your investor towards the outcomes that you both want. Would you agree with me, Larren, or would you push back on me?
No, I'll agree.
Can we mute Paul?
Mute Paul.
Okay. All right.
I think I'd add one thing to that, is that if you can manage also with your potential investor, whether it's your angel or your VC, to have, and it's important, a cultural fit. In other words, a perspective on ethics and so on. It goes a very long way in terms of having very difficult difficult discussions. And I would say I've had a lot of experience in that where I've found in the investments where we have cultural fit, there's a mutual respect that allows us to have the most candid and difficult decisions that have pushed the business forward, without somebody storming off. So that's a real asset as well. The money is just the enabler, right? It's not the business.
Right.
So you as an entrepreneur, you need to vet your investors as well and make sure that your core values are aligned before you get into this marriage. It's a marriage. Yeah. And when you exit, it's a divorce. And there's a lot of emotions that come with that as well. All right. So Hernán, a question for you. Or entrepreneurs in the region, especially your experience with Mexican entrepreneurs or Latin American entrepreneurs, how would you advise Caribbean entrepreneurs on gaining more experience in understanding VC and understanding term sheets and how to negotiate with investors? What advice would you give?
Interesting. I think the good news is that in these times of COVID, there's so many resources and so many people like doing webinars, and this is a very clear example. So I would say like take advantage of that, right? And log into as many things as possible, and perhaps it's kind of like a funnel, right? You start probably like very general about like, what's like my idea, and I need to understand like the basics of venture capital, etc. And the more that you're zoning in, then you're probably going to start looking for more, detailed things. There's several resources. One of them is Endeavor. You probably know about Endeavor. It's a very well-known accelerator that covers emerging markets and now even expanded into the U.S. and European markets. I think that they have very relevant resources. And from there you have the 500 startups or many of the incubators. I know that they hold regular like office hours and many of these webinars. And I would say that there's also a lot of information on the kind of businesses that are being funded, right? Like let alone TechCrunch for sure, that it's a very relevant source for this kind of for news on tech industry, more focused on the US and other markets, but they do cover Latin America and certainly crunch base, right? And my key advice will be, to once that you have or thinking about like a business model that you think that might be possible to work from Jamaica, look into the comparable companies that are in that same vertical in different parts of the world. And interestingly, you might find that the company that more suits what you're looking for, maybe in Thailand or in Egypt or in Indonesia, right? It's not necessarily a company in the US that probably fits what you want to deploy in Jamaica or in Israel or in the very common venture capital hubs. So I would say that if you can find kind of like what you're trying to build and look into comparable companies in emerging markets, you're probably gonna get some information. And I know this for a fact because I know that some companies in our portfolio have reached out to their peers in in countries that have not been seen as peer companies. For example, one of our companies reached out to another company doing exactly the same thing in Costa Rica. One of them actually reached out to another company in Puerto Rico. And many of these founders are like open to help or willing to engage at least into a meaningful conversation. So I would say that if you are looking into a business model and do it in Jamaica, and you can find like a company that does what you would like to replicate, don't be shy and reach out to the founder. I can guarantee you that unless he's like a very on an aggressive world domination plan, he will not share anything. But they will see Jamaica and the Caribbean as a tangential market. I'm not saying it's right or wrong. It's just how probably many entrepreneurs in the region see the Caribbean as a next expansion stage. If you're in Mexico, you probably think about Colombia or Brazil or the US as the next market, and it can take years, for an expansion. So I think that's to Paul's point about like, Jamaica as being small. I think this is one of those cases, right? A Jamaican entrepreneur can reach out to another entrepreneur anywhere in the world, and I'm pretty sure that most entrepreneurs will be sympathetic and they'll be open about some of the pitfalls or key points about building their own business in their own region, and a Jamaican entrepreneur can probably leverage that. And that can yield into, partnerships, collaboration, or who knows, maybe a merger, or maybe doing like a shadow agreement and doing like a joint IPO. Who knows, right? But I would say from an entrepreneur to an entrepreneur, sometimes the conversation flows more smoothly, and you will be surprised with the amount of information that you can get from more seasoned entrepreneurs.
I love that advice because we get our media primarily from the US here in Jamaica, right? So we tend to be very US centric and we look at Silicon Valley when we think about entrepreneurship, but the Caribbean is not Silicon Valley. I always say this to my entrepreneurs. Jamaica is not Silicon Valley. It's very different. And we can often learn a lot more from other emerging entrepreneurial hubs than we can even learn from the US. And there are very wealthy people with capital in other emerging markets that are more likely to think about investing in a Jamaican business than even American investors may be. So I love that advice. Hernán, you've opened people's horizons to the possibility that exists outside of just the US and Jamaica. Paul, we had a very specific question for you on a lot of people in our audience were there when you mentioned starting a program to train 1,000 software engineers from the region with local partners. A lot of people are remembering that. So everybody wants to know what's the update on that because we need more Jamaican software engineers. Where are we on that, Paul?
Great. Thank you. I was hoping someone was going to ask that. We reignited the conversation. We were obviously everything got frozen as people were trying to understand how do we operate in this world. We had lined up our money, our personal money, and we were looking for matching money, which we found. And we were having team members that were going to come over to Jamaica and start the process, and then the pandemic hit. And so I've talked with Rob McMillan, who's leading that effort for our side, and he is working on a strategy to operate it remotely while we're in the middle of this situation and not let it stop us. since the essence of the class was remote learning, I think we can pull it off. We were hoping to have people that were local that we could train and pull together. So I even went and asked my son if he'd be willing to move to Jamaica to lead this up. And he's young and healthy, and so we're still committed to it. We have partners in Jamaica that are committed to it, and we think it's probably time to kind of stop mourning our woe is us, we're in a pandemic, and just go forward and do it. And our original plan required on-the-ground presence, and we're adjusting that right now. So we have actually had several conversations in the past 2 weeks about how to reemerge and do that without having to travel.
Yeah.
And it's a little tricky because it required a physical on-the-ground presence and training and setting up facilities. So we're working at how we're going to do that. I'll stay tuned.
Okay, we're glad to hear that, because one of the things that will enable, particularly the tech sector in Jamaica, is to have a higher caliber of software engineers that are helping to build and grow Jamaican tech startups.
And I will actually say that, I was at a co-working space yesterday, and there was a software engineer there who works for WordPress, Jamaican guy. WordPress is a fully remote organization, and he was hired by WordPress and is based in Jamaica, and they paid for him to set up his home office. Just a great story. So we do have great tech entrepreneurs, software engineers here, but we just need to create more of them, and that's what Paul is talking about doing. So
we've had hundreds of people take the prerequisite class that we put online.
Mm-hmm.
So that process started, and we started the filtering. In fact, the day of the conference, people were online signing up and taking the class. So we saw the immediate demand, and hundreds were signing up immediately to take that course. So we were very encouraged, and I think it's going to happen. And I think there's a bigger commitment from the government and many parties now to make this happen. So,
absolutely.
Yeah.
And it comes back to, again, I'm going to push my agenda and
it's
say
a talent first strategy, right? That is my core belief, that talent comes first, and then we'll have the grade.
Yeah, and it's kind of a nice win-win. It's a nice business opportunity that also prepares the economy and the environment to have greater talent that will continue to feed this virtuous cycle. And so I think it's one of those first businesses that probably needs to happen. And I'm sad we didn't get it launched pre-pandemic. That's one of I'm just kicking myself for not being able to get that done faster.
Yeah. Right. Okay. So one last question it's actually two questions from the audience that I'm going to combine
into one question for our local investors and entrepreneur in the room. So the two questions are: Bluedot, Graft, and Bellindo currently looking for projects in which to invest, which you guys said yes, right? So, or are you on hold until things settle into the new normal? So I know that the answer to that question is yes, you are actively looking for investments, which is why I want to combine it with a second question, which is: what is the most active, high quality sector in Jamaica, and what is the quality of the entrepreneurs like in this sector? Like, where are you really excited about looking? So I'm going to ask Doug first, and then Dmitri, and then I want you to take a stab at it too, Larren. So.
Right. I think, what's been interesting me for some time, and even pre-pandemic, is health. And taking a very innovative look at managing health information, because when it comes back to the base of it, Lisandra, is we have the agility, as Paul says, of being a small market, but you want to almost create in Jamaica a lab that becomes a platform for scaling regionally and then hemispherically, and then possibly globally. So health is one. Energy, I think, is an interesting one, just based on I think some natural advantages that we do have, and I mean, generally on a global scale, things like water, purification, management, etc., is going to continue to be a major issue with environmental issues. So environmental and health are interesting. I think one more area is is I think there will be an opportunity to, I think a lot about the capital infrastructure of hotels, and those aren't going to come on stream anytime soon. Right now, it has to be, we have to be realistic to what, in my views, let me just say my view. The philosophy I take, Lisandra, and I'll say this, is today more than any time before, everything is on the table. There's no bad idea, right? I said to the teams that I'm a part of, I said, listen, put it all on the table because it can happen. So.
And in our pre-webinar meeting, you had talked about education as well, which is
Big
the
one.
industry that I'm in, online education. Paul just talked about moving his coding school online, and I think it's a massive, massive opportunity there.
It is, and I just want to give way to the other panelists, but for education as well, it's, there's an opportunity to close the gap, the economic development gap with education in a transformational way, in a great value for money way. You don't have to spend a huge amount of money with technology as an enabler. Well, and it's at the tertiary level. I think to myself, and Paul and I had this conversation about when they were looking at the coding school, is that, the skills, where it's at today is what products and services and skills people want, not necessarily the construct of a traditional degree. Right. And once we become comfortable and confident in that, we can just make the quantum leap.
Yes, absolutely.
So.
I think that's a huge opportunity, which is why I jumped into it. Okay, so Dmitri, what are the specific industries that you're looking at?
We're looking at all industries overall right now. And that's because I think that there's so much opportunity available and it's such a small market that there's no need to get sector specific. I'd really like to see more opportunities from the fintech industry as well as the waste management industry. I think that there are huge opportunities there, but nobody's really focusing on it as much. Especially now that we need more digital economies, etc., to scale. But I want to push a little more on just tech enablement of regular operations, and the fact that if you could be in manufacturing, agriculture, BPO, anything else, as long as you can leverage technology to increase the efficiency of your operations, that's going to, in essence, make you a tech company and very scalable overall. So if it's one thing for people to look at is making sure that you're leveraging technology to scale and grow going forward. And yeah, that's entirely what we're focused on now. We're, as I said, sector agnostic, just have tech-enabled operations and looking at exportable revenue, export-based revenue, and yeah, call us, email us.
So Larren, I'm going to tweak the question a bit for you. What opportunities, you as an entrepreneur, what opportunities are you trying to jump on right now without giving away the secret sauce?
So I'm actually about to launch a gig economy startup.
Okay.
Because people are at home, they need to work, they need to make money while they're at home. So I'm about to launch something like Fiverr or Freelancer that will give anybody the opportunity to sell their services and talents online, from graphic design to voiceover talents to whatever it is. So and there are a lot of people who are still at home, like I said, who have not gone back to work, who have talents that they should be able to monetize those skills and those talents online and get paid for it.
Absolutely, and the competitive advantage I see here is that, especially in this post-BLM world, especially where the diaspora really wants to help Jamaica, it's very hard to find the Jamaican Caribbean freelancers on Fiverr or on Upwork. So if we had a specific platform that agglomerated these freelancers, then it would be easier for people to find.
It's called muckle.com. You can go there now and sign up. It's mukkle.com.
All right. Yeah. Okay, so I want to end on one last question, which is for Hernán, actually. And it is this question of the project that you're doing with the Development Bank of Jamaica, which brought us all together here today. It's a really interesting project. I know you're looking at setting up a fund and a sidecar vehicle. So can you explain to us what that is and why it's so exciting?
Sorry, it broke towards the end. Could you repeat again? I heard until like sidecar and VC fund.
Right. So just explain to us what that project is that Angel Ventures is doing with the Development Bank of Jamaica and why it's such an exciting project for the moment that we're in right now.
Absolutely happy to. Well, we're we were contacted with the AVGA as you know, our first fund was actually a co-investment fund, and in 2008 we were spun out, or we were born as an angel investor network. 2008 in Mexico was certainly, you know, quite challenging. There were not many financing options. We started to see an influx of entrepreneurs. It was pretty much around the same time like Paul also came into the country. So, you know, those were the days, right, where a bunch of things and everything was there to be done, right? So our first fund actually was a co-investment fund, and we have 53 limited partners. So they were like very small tickets, and it was a very successful co-investment fund. It could be also named as a sidecar fund in for angel investor networks. So with that in mind, and obviously we have the Inter-American Development Bank as one of our LPs, and they enabled this connection. And what we saw initially from Jamaica and the stage where the ecosystem is today, we saw a lot of problems that we also faced in Mexico back in 2011, 12, you know, that probably are persistent even today in Jamaica. And many of these things are actually addressable through a sidecar fund and then like a proper VC fund. So I don't want to launch any spoilers because, you know, we're still in final revisions, and there's still some tweaks to be made. But what we're thinking is, you know, proposing DVJ with like a two-part structure. In one end, you will have an early stage or a seed, or to a certain extent, in a pre-seed vehicle where it's sort of like a matching fund. So, you know, if you invest, if a company is looking to raise, I don't know, $100,000, then this vehicle could invest 50K as long as there's a qualified investor on the other side that is putting like another 50K, right? So this is crucial. The trigger mechanism is not only money, it's actually qualified money, right? So it needs to be an angel investor, it needs to be like a diaspora, it needs to be like an incubator, accelerator, an angel investor network. It's not like you can come up with 50K from your own money and put them towards matching the 50K from the fund. So it's very important to bear in mind the trigger mechanisms for this matching fund. And then there will be another fund that can invest, does not necessarily need to invest from these, you know, early stage startups, knowing that many of them probably will not be successful. But this other fund will be investing in the best that come from out of these like matching funds or co-investment funds. But it's also open to investing into companies that have a Jamaican business case, let's call it that. So it can be a company that's expanding from, I don't know, other parts of the world into Jamaica, and the use of proceeds will be invested towards funding the Jamaican part, or it can also be invested towards successful Jamaican companies that go outside of Jamaica, as long as they're like a Jamaican holding company. Again, there's many things like still in the works, but if you are an early stage entrepreneur, definitely, you know, keep yourself posted on anything that comes out of the DBJ, because there's going to be like a significant call for proposals in for many of these funds. The rules will be very it will be very rules based, I would say. And if you're like looking more towards Series A or between Series C and Series A, then there will be a follow-on vehicle also addressed. And again, I think it's going to be quite interesting, and it's going to give us a lot of data on the Jamaican ecosystem. I think it's going to address the key, you know, pain points of the system today, with the idea of not only empowering good entrepreneurs, which is obviously the core target, but there's also a clear vision to empower a new wave of angel investors, right? Like we need to empower many of these talented people in Jamaica to start considering startups as a good investment, as an asset class, and we're also working very carefully on those rules to encourage more people to join the ecosystem.
I love that. That is so exciting. That's exactly what we need to propel this industry forward. And I would put out a challenge to all the entrepreneurs listening in, saying it's on us now. I'm one of you guys now. It's on us to ensure that we evolve our skill set to become more sophisticated, to be able to receive capital now that it is becoming more available. So with that, I say thank you so much for joining our live stream. I know we joined a little late due to technical difficulties. I'm so glad you guys were here with us. Thank you to my panelists. I thought this was amazing. A lot of gems, a lot of insights from everyone on the panel. Thank you to the Development Bank of Jamaica for bringing us all together, and the Caribbean Alternative Investment Association. Yes. Woo! All right. Thank you to everyone, and we'll see you on the next webinar.
Bye-bye.
Thank you.
Thank you.
You're the mic.